Thanks, and hello, everyone. My name is Dan Richardson. I'm a senior director at Mercatus, which is a technology firm that helps private market fund managers and investors trust their data, scale their team, and make better investment decisions. So, first key takeaway, private market assets are bespoke and unique, which makes data management and analysis uniquely difficult in this sector. A second key takeaway is that infrastructure as an asset class, it's still new, but it's maturing really quickly. LPs are getting a lot smarter and they're asking better questions, and fund managers are becoming more sophisticated at managing their data. So we're seeing some really positive trends across the market as a whole. Another interesting takeaway from the conversation is that really COVID has driven an increased need for specifically scenario analysis and better planning for the future for both LPs and GPs. We expect this trend to continue. Managers can choose to do it in lots of different Excel spreadsheets and across many different people, as they always have. But the expectation from investors is that the results are going to be instantaneous, and ultimately you just can't get there when you're managing your data so sort of reactively and manually. Another interesting discussion, and this was largely driven by Francisca, given her role at Quinn & Partners, is that there's an increased need for ESG data, but there still remains a lack of standardization around it within private markets. What she expects is that there's demand for a lot more quantitative ESG measures instead of just the sort of qualitative and box-checking ones that we have typically seen, and that this is the direction that everything's going to head. And she's also starting to see, and Sean also mentioned this, that there is already a move from annual reporting of ESG data to quarterly reporting of ESG data. So again, this is a shift that's happening real time and something that fund managers need to keep an eye out for. A final takeaway, and I think that really something that sums up the conversation as a whole, is that institutional investors know that data solutions are available to address the reporting and data quality issues that exist in the market today. And there is now a clear expectation that asset managers will take advantage of these. A big part of this comes from changing fundraising dynamics. Because they can no longer have face-to-face meetings during a fundraising cycle, really get to know their fund managers the way that they did previously, even assess body language, as Chase was talking about. LPs are really increasingly relying on hard data, track record, information about the portfolio, but also the underlying assets within it, to make their allocation decisions. And again, that is a trend that is going to continue, and it's going to increase in pace throughout 2021, and even as we look out to future years.